Hey, I'm Naomi Levy. I'm really excited to be back with Cameron and focus on health to be answering more financial questions. Uh, 2020 was certainly the year of the side hustle for a lot of us. In the hospitality business, as a bartender, I do also run my own sole proprietorship business. But of course, today we have a real tax professional with Karen to help answer questions. And today we're really going to be focusing on what it means when you have your own business, kind of no matter what shape that looks like, how big or small. So, Karen, this year, I think a lot of people who maybe either did a little consulting for a brand or were teaching some virtual classes might expect to get a 1099 in the mail, or maybe they don't expect it and they just get it. So what does that mean if you get a 1099?
Sure. Thanks, Naomi, for introducing me, and thanks to Focus on Health for hosting this second podcast on financial wellness. So, a 1099 miscellaneous often applies to a person who contracts for a business as a non-employee. And so, the specific 1099 is the income box would say non-employee compensation, which basically for the IRS clearly distinguishes you as a contractor and not an employee. What that means is the minute that you receive one of those, you will become a sole proprietor in the eyes of the IRS, and that will require you to file Schedule C on your tax return in the coming year. So for 2020, when you file, you will file Schedule C. And the way that the calculation will work is that income that you earned, less expenses, will be subject to self-employment tax, which is 15.3% plus any income tax in your tax bracket. Now, a lot of times as employees, we don't feel the burden of self-employment taxes, primarily due to the fact that our employers cover half, and then the other half is taken from our paycheck, each pay cycle. So we don't really ever notice paying those taxes. But when you become a Schedule C sole proprietor, you will see that fairly large liability show up at tax time. And so this is like a heads up that don't be, you may still be surprised by the number, but at least you'll have a basic understanding of what's going on there.
Got it. So even if I don't do anything, the IRS considers me a sole proprietor automatically. But what can so I'm going to have to pay all these taxes. None of it comes out the way it does before. So like, what can I expect that to look like? Should I be setting some money aside?
Yeah. So I think to start, you are required when you are self-employed. That's what this category is now called, because you're a consultant, which means you have the liberty of going out and winning work with any number of businesses. You could work for 1 or 10 or 20. You could, maybe have clients that you provide services to. And what that means is you're supposed to pay your taxes quarterly. Now, this is federal and state required. So generally, a good rule of thumb, and it really depends on your situation, would be to save 25 to 30% of your income to pay those taxes quarterly. The due date for those quarterly taxes is April 15th, June 15th, September 15th, and January 15th. So we just actually had one pass. But don't worry, you can always catch up. Even if you did, this is all new to you and you realize maybe I should have made a payment on January 15th. Feel free, you can make a payment now for an amount that you think is appropriate based on your income levels.
And there are some really great calculators online. That's what I use when I'm trying to figure out how much I owe, where basically you can just put in how much money you made. And this is just on your self-employment income. So like if you also work in a restaurant, you can kind of ignore that for these quarterly taxes, right? Like I'm just paying for what I earned. That's going to be this kind of 1099 stuff, right?
Correct. Yep.
Cool.
You can use those calculators, and you pay in 25% each of those quarterly dates that I mentioned. So you don't have to pay it all in April or all in June. You just pay 25% of the total each quarter.
Got it.
Yeah.
And so like if my business isn't regular, so say I did, a project that I got $5,000 in February, but then I didn't do any more work until August, like do I have to pay each quarter then, or if I
You
paid on the $5,000 then I should be okay?
Well, so the way the quarterly calculation would work is you would chart that 5,000 and the IRS would split your liability up 25% each quarter. So as your income grows, that payment gets higher and higher. So the first two payments would be low. And then when you added the August income in, you could expect that September and January would be higher.
Got it. All
Mhm.
right. So just always keeping it up to date will give me the best chance of knowing how much I owe. And what happens if I don't pay it quarterly and just wait till tax time in April?
So there's a series of rules if you don't pay until April. The failure to pay estimated tax penalty is something that I personally have seen a lot more of the last year and a half to 2 years. Um, so I would say that because of the computer generation of the notice and the fact that the IRS can so easily send these out now, there's not anyone that's really going to get a free pass anymore. And so you're really going to want to follow those rules as closely as you can, putting forth what the IRS calls a good faith effort. Um, and so if you don't pay, there could be a small penalty assessed in April. But if you pay in April, you won't be assessed anything past that point in time. Now, if some of you may say, well, I'm not ready to file in April, so I need an extension for taxes. It's important to note that an extension is not an extension to pay. So you can only extend to file your return, but whatever you think you owe, you need to pay by April 15th. But know that working with a tax professional would probably ease a lot of the pressure of some of these deadlines. And another thing that I do for some of my clients is we work through like what's feasible for them. Because sometimes April payment is just not feasible with bills. But if you consult with a tax professional, he or she can really guide you through that muddy water there. So it's important to reach out.
Cool. Okay, and then I'm just going to mention, like, as a sole proprietor you can do a lot. You can have what's called a DBA, which means doing business as, which means you can have your own company name without really having to go much further than just filing one form, usually with like your local municipality that you're doing businesses as something else, for when you're, say, promoting your business or writing your invoices or whatever it is. But that means also you can, do all the things we think of like big businesses, like writing off expenses. You can open bank accounts, all of those things. But so when it comes to expenses, is that on the Schedule C? That's that same form you're talking about?
Yeah, exactly. Yeah, let's spend some time on expenses and income tracking. So income is generally one line item on the Schedule C, and that's where all of your 1099 non-employee compensation would flow through, as well as any other items other income you may have earned. So a 1099 miscellaneous is only required when you've been paid more than $600 as a contractor. So if you ran a gig and earned 500, you may not get a 1099, but you are still required to report that on line 1 of the Schedule C. Another thing to note is the expenses. We can't just put a lump sum that says business expenses on our Schedule C. We must itemize those into several of the categories, advertising being one, equipment being one, supplies. Naomi, what other suggestions might you have there?
Yeah. So personally, I keep I have a business credit card so that it's pretty easy for me to track those expenses separate. But I also keep an Excel spreadsheet to track everything. So when I first started doing virtual classes, I needed to buy a ring light. So that was considered a business expense. And when I teach a class, I sometimes have to buy product to be making things with. So that would be an expense that I put into my Excel spreadsheet as well. And then when I'm just tracking it as I go, then at the end of the year, when it's time for me to do it, I have it all listed out. I know where I spent my money that would kind of go against whatever, you know, people paid me, and kind of go from there. Yeah.
Hmm. Yeah, so that's exactly right. Anything you need to use or consume in order to conduct your business or provide your services is deductible as a business expense. Also, any certifications you might obtain during this time, as long as they relate to your business, they are deductible. Now, tuition and things like that on obtaining skills that don't directly relate to your business, that's for a different conversation, and you should seek a tax professional's expertise on that deductibility. But I think, Naomi, you mentioned something that might be very common to our audience.
Yeah, if you get, say, ServSafe certification or your TIP certification, I know that like a lot of times when you're doing like event work, gig work, you need stuff like that. So that would be an easy certification to write off. And I think that there are a lot of kind of really good black and white expenses like that, like the actual tools, like the actual ingredients you're going to be using. Um, we've all heard of some of these gray area expenses. What would that be, and what should I do if I'm curious about any of those?
Yeah, so you might be thinking of like the home office deduction, especially since all of us are pretty much working remote or some portion remote these days. But for a deduction like that, you're going to want to seek a CPA's assistance. That's just a little bit trickier of a deduction, and the calculation itself is pretty intricate. There's several different levers you could maneuver to calculate that number. And so to get the one that's most advantageous for you and within the rules, you're going to want to seek some help.
Got it. But yeah, it sounds like when it comes to running your business, and I mean, I think I learned a little bit from trial and error, unfortunately, of, you know, year one, having to like go back through bank records and find expenses and figuring things out. Just, you know, keeping good records is so important, and it's just going to make your life so much easier, whether you are, you know, doing it on a little simpler terms. You just made, you know, a few $1,000s doing some consulting, but, you know, you had to buy, you know, a handful of things, or whether you're doing something more intense and might actually want to get a tax professional involved. Just having all that stuff ready to go, and not having to like dig through things or find old crumpled receipts or anything like that is really good. You know, if you're not Excel proficient, there are all sorts of like even iPhone and Android apps where you can like scan in receipts and things like that, for people to find too, so that you can just kind of in the moment get that all together, or as close to the moment as possible. I know sometimes you know, things can get hectic. And it's the same when it comes to tracking how much money you have coming in. So for a lot of us, we have to ask to get paid. It doesn't happen automatically, like if you're working at a real job. So you have to send an invoice, and whether you know, make your own invoice on Word or you use a QuickBooks or something like that, having those and keeping track of those too will be important, especially when it comes time to, right, get your 1099s, because then you'll know, you know, kind of what you have and what maybe you need to claim on your own. Cool. So we talked about, you know, everything that's sort of involved when you become self-employed, or a contractor or a consultant or a sole proprietor. Those are kind of all synonymous. You can, for these purposes, sort of use them interchangeably. But if my business now starts to grow, maybe I'm bringing on a partner, maybe I might be hiring some people now, you know, what should I start thinking about then?
Great question. So, you know, the small business community has quite a few options in terms of like establishing a business and building growth and you know, growing an employee base. I myself have an LLC set up for my tax and accounting business, and it is a single member LLC, meaning there's one owner right now, which is me. um, to Naomi's point, if you're trying to introduce a partner, what's nice about an LLC is that you can remain that type of entity. You can keep that name. You just become what they call a pass-through LLC, so a pass-through limited liability corporation. At that point, the LLC is by far the most flexible entity type. It provides a lot of room for tax planning and tax strategy. And you would file, once you've admitted a partner. So today I file Schedule C on my 1040 for my business. But if I were to admit a partner, we would be a regarded entity now, pass through, and we would need to file a 1065. Another type of small business preferred entity is what we call an SCorp, and they would file an 1120S. Now, SCorps can also be singularly owned by just one person, or you could have up to 100 partners. And that one also has a lot of tax planning opportunities within that structure. But both of those entity types or business types, one, limit liability, which is an appeal. So if you speak to an attorney about this, they'll talk about limiting liability and how these two different entities could do that for you. And then you would probably go on to talk to a tax professional to determine which of those entities is best for you and your situation. And oftentimes I ask my clients, like, where do you see this business in 5 to 10 years? What's your revenue growth plan? Like if you work day and night on your beloved business, like what does it look like in 5 years? And that helps us sometimes determine which of these business types or entity types that we should choose and move forward with.
So it sounds like when it comes to sort of taking the next step past just maybe getting a DBA and being a sole proprietor, that's when it's really time to start reaching out to your network, talk to other people you know in your area, start getting names of tax professionals, of lawyers, and start really getting professionals involved, because each situation is so unique. It's really not something that we can definitely, just give some sort of blanket statement on. Really, you need someone who's going to understand your business to really understand what is the best thing for you.
Yes, exactly. And entrepreneurs generally, like I said, that vision, that plan, that's really key to choosing the right type of entity. Another thing to note, whether you're a sole proprietor or an LLC or an S Corp, these are all what they call like flow through entities, which means all of the income, it doesn't stop and get taxed as a corporation. Like some of our, the big companies that you know of, like Coca-Cola and Pepsi, it flows right through. And so it's still subject to self-employment, and it still requires those estimated payments that we talked about earlier.
That's really great to know. So this was really great. It's definitely given me better ideas of better ways I can also plan as a sole proprietor. And, I think a lot of us who just do a gig here or a consulting job there don't necessarily think of ourselves as business owners, but ultimately we are, and so kind of trying to wrap our heads around that and give ourselves the resources that we need to kind of run that business the best we can is really helpful. So thank you so much, Cameron, for that today, and thank you again to Focus on Health on making financial wellness an important part of their program.
Yes, thank you.
Great job, y'all. Sorry, I was like clicking 5 things at once trying to.
No, you're good.
I was like, click. Yay, that was so great, y'all. I think that will be really informative for
it might still, it's the
viewers.
red light. The red light.
Yeah.
That's fine. I'm just leave it. I'm gonna let LP cut this all out.
Oh, gotcha.